What is the data really saying? Welcome to ChartWatch, where we break down a few key charts and explain the story the data is telling about the economy and long-term investment trends.
Hello, everyone. This is Tom Siomades, Chief Market Economist here at AE Wealth Management. Happy New Year. Welcome to 2026. Okay, so first chart that we'll look at today is this chart that's labeled the domestic macro. And what I want to highlight here is, there's been sort of a disconnect, right? A lot of people have been talking about how we're expecting GDP to crank up and get a lot better and stronger as we go forward. That's all well and good on a top line, but what you have to be mindful of is you have to look at this bottom portion here that says mind of the market. You've got really, really, really bad consumer sentiment right now. People feel bad. And I want to highlight the fact that sometimes, people get caught up in the numbers and the empiricals, but feelings matter, right? And at the end of the day, if people feel bad, we're not going to get that higher growth GDP because people are going to hold us back. So be mindful of that. It's a lot easier to get caught up in the excitement of, oh, whoop-de-doo, we're going to have 4% growth. Everybody's going to be partying and winning. And that's not the reality, because people that have money in the stock market, people that have real estate are going to do a lot better than the rest of society. But, unfortunately, they're not the majority. The vast majority of people live paycheck to paycheck, and they're struggling and they're not feeling good. So that's one to be mindful of. The other thing I want to highlight is, it's no surprise to anybody, but this market's been driven a lot by tech. That continues to be the case, and you can see that down here when you're talking about the top holdings and the top sector. Clearly, a third of the S&P 500, over a third, is all tech dominated. I don't really see that going away, but that may seem like it's a sort of a very narrow explanation for performance, but you can't complain because you have to bring people back and say, listen, we've been averaging 14.8% the past 10 years, 14.4 the past 5. The last 3 years have been great. Be mindful that the average for the stock market is about 9%. So we're doing way better. And I would argue, hey, you could nitpick about how we got there, but please remind people, we're doing like 6 points better than historical averages. And hey, if it happens to be AI this time around or tech, so be it. But just be mindful that that's the reason for it. And I don't really expect that to go away. Okay, final slide. Love this one because nobody knows what to make of it. It just shows you just how humble we all need to be. Nothing ever repeats itself over and over again. And if it does, it fails spectacularly. This is just all the different asset classes and how they perform, and that you can't really bank on anything. When you look at, for example, crypto, crypto's done really well some of these years, but then when it does bad, it does really bad. So I would argue for all the people that are talking about how much money they made in gold last year, okay, just take that with a grain of salt. You still need a good balanced asset allocation. You still need a plan. You still need people to understand that, what goes up isn't necessarily going to continue going up the following year. So that's a good reminder. So just 3 slides I wanted to cover real quick. And again, I said it's out there on the DVR. There's a lot more slides. There's a lot more information out there. And as I said, if you're interested, reach out to me, Ben, the rest of the team, anybody that you're comfortable talking to. And if there's anything specific that you want us to cover, we can. But it's also important for you guys to get a feel for how this stuff works, right? And so we'll be doing these, as I said, on a monthly basis. And hopefully, you guys start using this, as part of sort of your ramp up to staying knowledgeable and being a student of the market. Have a great day. Happy New Year, and we'll talk soon. Take care.